When I play music, do you hear the music or no?
No,
Okay,
not on here. No, I hear it on the actual live.
okay. Because I'm gonna play some background music and just leave it running.
Yeah, go ahead.
Hold me close till I get up. Time is barely on our side. I don't wanna waste what's left. The storms we chase are leading us, and love is all we'll ever trust. Yeah, no, I don't wanna waste what's left. And on we'll go through the wastelands, through the highways,
Okay.
till my shadow turns to sun rays. And on we'll go through the wastelands, through the highways, and on we'll go.
Let me see here. 4 hours.
Finding life along the way, melodies we haven't played. No, I don't want no rest. Echoing around these walls, fighting to create a song. I don't wanna miss a beat. And on we'll go
Did you see the weekly?
through the wastelands, through the highways, till my shadow
The
turns to
weekly
sun
candle.
rays.
The weekly is looks like it's bearish.
Through the wastelands, through the
Yeah,
highways.
The weekly looks like it's bearish. Um, we even disrespected the 50% equilibrium, and we kept it again lower. Inverse everything bullish here. That's a market maker sell model on the daily. But
yeah,
overall, to me, it looks like it's bullish. So we might actually go down to sweep something and then go up again. Not sure. Um, but the safe, think safe scenario right now, safe trade idea to take is should be bearish because we've been like disrespecting a lot of bullish uh, ideas and a lot of bullish PD arrays. So I would say that we're bearish so far.
yeah, I agree. It looks like on the weekly, we are disrespecting several bullish building blocks. We are bearish, and yeah, it looks like yesterday we had a midweek reversal, and we're gonna head down for more liquidity, sell side liquidity. The
Yeah.
closest daily liquidity would be the low of Friday, which was $250 away from the current price that the Nasdaq is trading at. So um, there's plenty of space, plenty of room to be able to take a sell as long as it's within a discount. Uh, should be good.
We'll see. OS Kong, how you doing, man? Let's see. Are you gonna be trading today, OS Kong? These are the two areas that I've marked. Maybe I can make it a little smaller on the 15 minutes here. But anyways, we need to go to that big one. And on the 5 minutes, looks like it's going to be this one, the 3 minutes. Doing great, watching your videos. I'm also struggling to get funded. We'll get there. We'll get there. I mean, there's nothing. So when I lose an account, there's nothing I can do basically. All I can do is go back to the chart, back test, gain confidence again, um, and just the music is loud. Okay, one sec. How about now? Great. Okay. So as I was saying, um, whenever I blow an account or lose an account, whether it's funded or a challenge, I can get upset all I want, but at the end of the day, there's nothing I can do basically, um, except to just go back to the chart, back test um, my strategy again, and get confidence back again in my and gain trust in my strategy, and just take it slow. One thing, two of the things that makes me blow a lot of accounts is over leveraging and over trading with not giving my trades enough stop loss to play out or enough room to play out. And these two things are very bad, and I realized that they're pretty bad to do. That's why I decided kind of like go back and sticking to my roots of getting in small positions, whether or not I pass the challenge in a month or two. One thing with the future markets and the futures accounts from like Top Step, My Funded Future, and all of that is they're like subscription base on a monthly basis, and they kind of like some way or other they kind of push you to pass your trading evaluation account in like 1 month or so. So that kind of put stress on me personally, because I feel like, oh, I want to speed run this challenge, so I don't get charged again the same amount and all of that, but I end up like blowing the account and paying for it anyway again. So this is a really bad mentality to think about it that way, but that's how I used to think about it. Um, but yeah, I'm just gonna go back and take it slow, get in small positions and stick to a specific risk to reward ratio and a specific risk amount that I'm going to risk um, every trade idea that I see it's worth taking. and I'll just go from there. But it's really heartbreaking, and it really hurts a lot when you blow an account. But at the end of the day, as I said in one of my videos before, at least it's futures account are good because they're kind of like cheap. They're not like forex accounts where you have to pay like $500 or $1,000 to get yourself a challenge, and then when you blow it you feel like it's the end of the world. So that that's why I like the futures accounts from like Top Step and My Funded Futures, but at the same time they don't really give you room to test all your ideas or all your trades, because you basically, if you over leverage and you try to speed run it so you don't get charged for the second month, if you're like taking it on a period of 2 months, um they don't give you a lot of tries. Like if you're risking $500, no, if you're risking like $800 on a 50k account per trade idea, um and you basically don't have a lot of a lot of room to go, because if you lose one trade, you're gonna feel like you're almost there to blow that account, and you're at that threshold of drawdown, and you're not gonna feel in the right mind to keep trading and keep taking uh good quality trades and good quality setups. And that's in my opinion. So I'm just gonna be going back and back testing what I've been doing, and gain confidence back, uh, and just whenever I jump on the chart again and start to trade, I'll just do micros, and I will have a risk in place of like, if I have a 50k account, um, all I can um, risk per trade idea is like $500, and that's going to be my max. So if I lose, that's gonna be a negative $500. If I win, as I'm gonna take a small 1 to 2 trades, and I'll be making $1,000. And I'm just gonna limit myself from taking a lot of trades and over leveraging, and that's how I'm going to do it. $500 is still a lot per trade idea, but um, I feel like with my strategy of, maybe let's say if you have a strategy of like 60%, you're gonna do just fine risking $500 per trade idea on a 50k account. If you have like a 150k account, um, I would risk like $1,000 or something like that. So that's what I would do. Market opened here and start dumping down. So if you're still there, tell me what you've been doing to kind of like get yourself back on track towards funding and passing evaluations account. back on paper trading until you gain confidence. Yeah, that's basically what we should be doing. Just whenever we lose an account or blow an account, go back to like free accounts so you don't keep losing more money, and just back testing, gain confidence in your setups and your strategy back again, and just to go from there. That's I would agree with that. So what I've been doing before um, is not trade any of that until the silver bullet timing, until 9 a.m., and see where is the drawn liquidity and where the market is easily reaching for. So that is like my kind of like my bread and butter setups or strategy that I'm looking for. For I kind of like shifted away from that a little bit um, when in my past couple of funded accounts or challenge accounts. That's why I lost them with over leveraging, of course, and over trading, because I believe in something in like one setup and it fails, and maybe not giving it enough room to play out and stop loss and all of that. And also, every move in the market, I try to take a piece of the pie and just to try to get a quick scalp and stuff like that. It ends up reversing on me. Um, and if you're not getting in good scalpings setups, that's not gonna be a good idea of taking the trade from the get go. Um, so I'm just gonna go back to my roots of my base strategy and just waiting for that silver bullet time. Um, Looking for where is the market likely to draw to easily, and then I'm just gonna get in that direction. If the market starts to chop up, I'm not gonna get in anything. Also, one other thing that made me lose accounts is dropping to smaller time frames like the 1 minute and the 30 seconds. um, I'm just gonna go back to that and fix that by staying on the 3 and the 5 minutes, which is what I used to do before, and it worked out well for me because like especially the 5 minutes, as ICT said before, it removes a lot of blurs, and I kind of agree with that. 15 minutes is kind of like pushing it, and it's going like towards swing trading style. Um, I like to be in a trade maximum uh, like 30 minutes if it's not scalping, and if it's like just the normal setup, like reaching for 40 to 50 points, $50 move or $40 move, um, staying on the 3 minutes, 5 minutes, and just letting the market play out its move. I think it's a good idea.
Yeah, I basically agree with almost everything that you said. The only thing that you can really do once you blow an account is to go back to the drawing board, um, and just back testing more, fixing what needs to be fixing, whether it's risk management, whether it's might be, psychology, it might be, uh, maybe, I don't know, profit target, maybe you're targeting too
Yeah,
much,
maybe
maybe,
stop loss. You're not putting the stop
maybe
loss in the right place.
exactly. Yeah. You
That's
just
what
go
I.
back to the drawing board and just figure the thing out, try to kind of work, like reverse engineer it and work it backwards and see what's making you mess up in doing that.
Mhm.
And I wanted to also add that I have a long history of
Blowing
blowing accounts
accounts.
myself. So yeah, it took me, I'm gonna be fully transparent. It took me 32 challenges for me to get my first
And
payout.
it's not just the futures accounts. It's
It's
forex
no
accounts.
for me, yeah, it was all forex at the beginning.
But to be honest, with your blown accounts, you probably know, like, you wouldn't have blew like half of that just because the drawdown rules that they had, that
Oh yeah,
company.
100%.
Yeah,
But still,
they had the trailing drawdown in the forex accounts, which is like pretty bad.
yeah,
And
I don't want to say the name of the company, but yeah, they are known for having trailing drawdowns. They basically, the rules are a little bit harder to get an account just because they, uh, and to be honest, I've been like I bought several accounts with them. I spent a big chunk of time with them. They do that not necessarily to make you blow accounts, but to actually find super that they're looking for very super consistent traders, and the trailing drawdown thing makes sure that you're super consistent with your trading, because if you're advanced, the trailing drawdown is not going to bother you. But if you're not advanced yet and you're kind of struggling to approach profitability, if you're right there and you need a small little jump forward to reach it, then you might not be ready yet for trailing drawdown. It's just gonna, you know, complicate your trading or make it a little bit harder for no reason. But yeah, that's pretty much it. I mean, I was gonna say that basically, um, yeah, I would recommend to not do the same things that I did. Like I was buying challenges as I was learning, and I was aware of the fact that I
yeah,
wasn't profitable yet.
because you didn't go through the demo phase first. You just
Yeah,
jumped in
exactly.
head first.
Which is bad because I found myself quickly invested
Yeah.
uh 20 to $25,000 in challenges, so I had to like make a shift. Once I cracked the code of how my risk management was going to be, how my risk to reward was going to be, how my you know h- how I target liquidity within a trade, how I basically how I limit myself to how many trades a week, how many trades a month. Those things. Once I cracked that code, I started uh, doing a lot better, and then yeah, from there I kind of recovered first the money that I was invested in, and then I started to making payouts and profit on top of the initial investment in those accounts. So yeah, out of those 33 accounts, there are not all, by the way, and that's another thing too. And this happens to so many traders. Those 33 accounts are not blown challenges. This is the thing. Out of those 33 accounts, I probably passed 17 or 18. So the problem was that the inconsistency. Even if you like pass a challenge and get funded, the inconsistency is gonna prevent you from actually making a payout. It's the same rules on the challenge apply on the live account as well, so you can easily blow through the drawdown, maximum drawdown on a live account as well. So a lot of those accounts were accounts that I passed the challenge, got to live, and I wasn't consistent enough to keep having winning trades to have uh, a payout before blowing the live account. And another thing too that a lot of traders go through at the beginning, so is basically when you're excited to get your first live account. Once you're super excited to get